To keep up with today's increasing production demands, growers are quickly realizing traditional fertilizers are coming up short. Beyond a single form of sulfur, MicroEssentials with Fusion technology delivers sulfate and elemental sulfur for season-long availability. Early in the growing season, sulfate sulfur provides young plants the nutrition needed for optimal growth. But plants dependent on sulfate sulfur alone are left vulnerable to the yield-robbing impact of leaching. But MicroEssentials is very different. Over time, microbes in the soil more efficiently convert the elemental sulfur into sulfate, continuously supplying the crop throughout the entire season and beyond. Only MicroEssentials with Fusion technology delivers season-long sulfur for steady nutrition throughout the growing cycle, resulting in higher yields and higher profitability.
Thanks for joining us here at the Big Iron Farm Show. Thanks for finding us in our new location. We're pleased to be in this more centralized location for our Market Outlook panels that we have here each afternoon at 1:30. I would note if you can't catch all of them, you can find them online as well on our YouTube channel and at yourliveevent.com too. So check it out. My name is Don Wick. Melissa Hammer is with us, who joined the team here this spring. We got Tyler Donaldson, Jay Rader, and of course, Randy Conan just wrapped up the markets. Melissa, why don't you introduce our panel?
Yeah, it's great to be here this afternoon. We got a great panel here talking about the market outlook. We've got Randy Martinson here with Martinson Ag Risk Management, Allison Thompson with the Money Farm, and then Don Rose down there with U.S. Commodities.
Well, we just heard those numbers. Particularly on the bean side, I think was a little bit ugly, some double-digit losses there, kind of Mexico, some higher prices on wheat and such. It is a report week. We've got a supply-demand report coming out, a WASDE report coming out on Thursday. Outside markets were kind of ugly today as well. Don, let's start with you. What's happening right now in the here and now in these markets?
Well, you know, I think the big thing is, one, I'd say thanks for inviting me to come up. But going forward, I think really what we're looking at is a market that we're kind of nervous feet ahead of the report. And I think it was a market that we're going into harvest. And I think we're going to have to prove that the crop's getting smaller, not bigger on these numbers. And we got technically overbought, stretched out a little bit. And I think we got pulled back. Technically, poor close today. You know, under $10, not what you want. Turn some of our systems short. So we'll see. I think we need a bull card. I always say it's like a card game. You know, we need, as the cards come out, we're going to get a little smarter. And I think if the report has yields lower, we'll go up. And if not, I think we're going to sink back down into harvest start again.
Allison, we kind of hit that $10 mark, drop below it actually. What's that mean to you?
Technically, it's not a very pretty sight for new crop soybeans, especially for guys looking for harvest delivery and that aren't storing beans. I think it leaves a lot more questions than answers because it does leave downside potential open. That's been kind of an area of decent support. So honestly, at this point, without maintaining good support levels, we do keep the downtrend pretty well intact here. We hit resistance like on the dot at that 1031 area, 50-day moving average, and also a 25% retracement of the current move down. So we hit resistance, and if we can't hold support, and like you said, if yields are going to be as big as they are, the crop's going to be as big as it is, I think the path of least resistance remains down. We still need good demand. We've seen China come in, but the trade's always looking for more, especially with a big crop on the table. And also with South America too. I think that's the next thing the market's going to start watching is what their weather is, especially as they're entering their planting season for soybeans. So it's gotten some market attention here lately just because it's dry. They're looking at, you know, the driest conditions they've had in 40 years for this time of year, but they're waiting on monsoons. And unfortunately, when those arrive, it can alleviate conditions in a matter of weeks, not months. So it can quickly reverse. And so we are looking at rains entering that forecast here in the middle of the month. So if that were to all take place, I mean, it could be a double whammy here very shortly for the soybean market.
Randy, what are your expectations for this crop report? We had that Pro Farmer Crop Tour not too long ago. We were looking at a 183 corn number, those kind of things. What are your expectations when we get into USDA's numbers?
You know, I guess I expect to see this, maybe the yields come down a little bit. I think we've taken some of the top off, but it's not going to be big. I mean, we're still looking at a fairly large crop out there. I'm more looking for USDA to make some adjustments to the harvested acres. You know, I don't think we've made any adjustments to the drowned outs, to the prevent plant that we've seen up here in the northern plains. And it's primarily only going to be, you know, northern third of Iowa, North Dakota, Minnesota, South Dakota that are going to show up with these lower acres. But you look at right now what USDA is projecting, we're at 91% you know, harvested to planted acres. Well, that's traditionally where we always are. So we haven't seen that adjustment come into play. For soybeans, we're at 99%. So we haven't had.
You're cutting interest rates thinking that people are going to borrow a lot of money and spend money, but they're having trouble making the payments they are now. That's inflation. So it's kind of a double-edged sword, and I think we need to be more aware of that moving forward. I wouldn't be surprised to see inflation come back as we get into 2025. We may see it help in the near term, but I'm just not convinced it's over with yet.
Yeah, you know, those interest rates higher today, how does that kind of affect how farmers approach their risk management and deal with that?
I think they're learning yet.
Yeah.
You know, we haven't been used to interest rates, you know, that big of interest rates or that being much of an impact. So I think there's a learning curve that's happening there right now. And kind of to tag on to what Allison was saying a little bit about the economy, I think we got some contradicting news that's coming into play.
Yes.
You know, you've got gold that's rallying to all-time contract highs. You've got the Dow at contract highs. You've got, you know, copper at lows. You know, copper is an indication of what happens to the economy because it's a resource. It's a building, you know, what we do for, you know, when we're building and creating new. So,
Yeah.
and gold doesn't go up the same time the Dow goes up because you're either investing in one or the other. So to me, we're kind of seeing a false narrative being portrayed that things are better than it is, and the last guy out's going to get stuck with the check. You know, so.
Yep, exactly. But overall, for farmers in general, if you're borrowing money, it should help you out.
But when you look at it, I mean, I think, you know, you're talking about interest rates and this and that, but there's a big carry in the grain market, and that goes to the fact I don't think you're going to see a lot of big producers selling at harvest. I think we had that, you know, more in the August time frame. But there's a carry in the market, and from a marketing standpoint, you know, when you have, you know, 34, 35 cents from December to July, 7 months, you know, you need to take advantage of that, particularly storage, particularly when the interest bill is going. So I think a lot of people should take notice of that, look at that. No real advantage to sell in the upfront months. Look at the back months, you know, 60-some cent carry from November to July of next year. And then you can market it throughout the year, and maybe the basis helps you too.
Mr. Powell's been pretty clear we're going to see some kind of interest rate cut, whether it's a quarter point or half. I guess the question is, which is it, a quarter or a half, and what happens to the balance of the fall? Do you expect we'd see more interest rate cuts before the end of the year?
Well, if you look at the futures market, they already have 1 to 1 1/4 interest rate drop going out to March. So, you know, I think something's going to happen. The futures market is anticipating that. It seems like a lofty number, but that's what the futures thinks.
What goes up must come down, right?
Mm-hmm. Mm-hmm.
Well, it's the one thing the government continues to have as a tool in their toolbox. They take the interest rates up, and then when it stalls, they take it back down to kind of refire it again. So that was on the last cycle that they had. They did the same thing. So you'd anticipate the same, I guess.
I feel like we talked a lot about bearish news. What's the bullish story out there? Is there anything that got you excited about this market?
Oh, I think most definitely. You know, you're talking about the negative. I think you've scored the harvest lows unless this report is negative, you know, which is the next card we'll see. But there's a gap on November soybeans at 10.45. You know, those are often targets. Double bottom on beans already. We have a gap on December corn at 5.05. That seems way out of the pitch, but, you know, we thought for a long time 5 was good support. It's a La Nina year. South America is La Nina year. Southern Brazil, Argentina go dry. So that's a big probability. And by the way, they're the elephant in the room. They grow twice as many soybeans as we do. So if South America is a problem, we got a big problem.
Yeah, I also think we should mention the funds as well, as far as turning this market around too. They still remain at large net short positions. Then they've actually started to lighten up on those, and they haven't been buying it, but they've been exiting positions. But we haven't seen them come back in and short the market here either. So maybe they are lifting. We just need something to spark them to get out, and we could see a sizable rally. Whether that's weather, U.S. production, I mean, there's definitely some moving pieces here. I mean, the USDA has had some pretty lofty expectations for yields, record yields. Given the acres that we had, the spring that we had, you know, obviously I think it's debatable yet, but that could be something definitely to watch, especially going into winter. It doesn't have to be at harvest, but over the next few months, I think that's something definitely to watch that could move the funds, as well as global weather. We talk a lot about South America, but with the weather system too, it's also affecting the EU for wheat, also Russia, Ukraine for wheat. They're planting their winter wheat crop and they're dry, hot and dry. The EU's been wet, they have quality issues. So I do think that the low is in on wheat too, wheat and corn. I'm probably a little bit more friendly. Beans I think have just a tougher story from a demand standpoint. We're sitting on pretty good supplies, not only here, but on the global level as well.
Randy, we always talk Monday about what's hot and what's not. What's hot in this market?
Well, like we talked on Monday, you know, right now I think the demand has been pretty good. Wheat is a hot market because, you know, we're finally working our way out of that. You were looking at, you know, Russia having a production estimate of 85 million metric ton, down from the 90 to 100 that they were talking about the last couple of years. So hopefully we can get some demand in there. We're dry in the southern plains. That's making it a little tougher to plant the winter wheat crop. Corn demand has been fantastic. You know, that's one thing that our exports have been continued to be strong. Thank God for Mexico, because they're the ones buying most of it right now. Colombia has been a big buyer of our corn. They're the next one, I think, on the list that's been aggressively buying this year. So our demand side, you know, with the ethanol and exports, have kept corn in the market. Now, if we see stocks drop below 2 billion, then we definitely have put a bottom in this market.
That would be exciting.
And we're not far off of it.
No, we're not. Expectations are right there.
Yep, right at 2 billion. So if we can see a little lower acres, a little lower yield, or one or the other, you know, we could
Better
drop
demand.
a little better demand. Feed demand, I mean, that's another thing, you know. We're importing more cattle out of Mexico and Canada right now that are going into our feedlots. So our feedlots are actually showing bigger numbers than we saw last year, because of the imports coming in. So we are seeing a bigger feed demand than what we had initially anticipated, because we thought we were going to continue to see lower numbers. And I think that's something that the market is playing catch up on as well.
And you look at the report that we're going to have on Thursday, if you look at those census numbers on corn exports, it looks like to me that you're probably 40 to 50 million too low, which means that the ending stocks for this last year probably go down. We'll see. And maybe 5 million on soybeans.
Yeah.
I would know we always get the better questions from the audience, and we've got a couple microphones out there, so if you have a question, give us or one of them a wave so we can get your questions answered. That's what these sessions are all about. I look at what's happening globally, obviously what's going on in the Middle East, what's going on with Russia and Ukraine. I don't think it gets a lot of discussion. We're not moving a lot of stuff through the Suez Canal or that Red Sea, and so everything's got to go around that Horn of Africa. It probably works when crude's at a certain level, but what if that increases? I mean, do we have to, how's that situation, what impact are we seeing in that Red Sea, Suez Canal area?
I think freight costs in general are higher right now. I don't think it matters where you're shipping from or through. I think freight rates, because even we were looking at barge rates too, just with the Mississippi being down and lower. Even South America has had issues with their rivers. So I mean, it's a global, I think, issue right now with transportation, and the rates are just high. So that could be something to watch going forward too, for another, could be a card for crude oil prices going forward, but also fertilizer, any inputs like that's another thing to keep an eye on.
And if you look at our largest trading partner is actually Canada, and our largest corn buyer is Mexico. So a lot of this with, you know, the high transportation cost and this and that, a lot of it's turning inward to a certain degree.
Allison didn't want me to talk about this, but we got to bring up politics.
It was a specific request.
We
So
can
you're
skip Allison
directing
if
it
we
to
want
me.
But obviously, we got a debate tonight. We've got election coming up in some 60 days plus, something like that. How big a factor is that, or is it a factor in the marketplace today? And what will it mean after November 5th?
Well, I've been around a long time, and they always told me that you don't talk about politics and religion, so we'll
I didn't ask you how you voted.
right,
Does it impact the market?
right, we'll break on that one, but but obviously, I think one is a free trader and the other is not. So I think you have to make a decision. What kind of economy do you want going forward? Do you want one that the government lifts you up, or do you want capitalism to lift you up? And then I think everybody has to decide, which candidate that is.
One of them, we'd be out the job.
There goes the jobless rate, right?
Yeah, supply and demand is very important, and that's a real thing every day. So that one's really hard for me to deny. You really know what the price is out there, and it's worked into markets, whether you like the price or not. I do believe that. But yeah, I think there's going to be implications that, it's anyone's guess how elections and stuff are going to turn out, and they'll ultimately be things that are going to be headwinds for grains, livestock, commodities across the board, regardless of who gets elected. So it's just dealing with them when they come, trying to predict it. We're never going to get anywhere. So, you can't front run it all the time. So just do the best with what you can today. That would be my advice.
Do you see any implications? Is the trade paying attention to it?
Oh, boy. To a degree, but not really. I think right now, markets don't like uncertainty.
No.
And, we kind of know where one stands. They've already said what they're going to do if they get elected. The other, we're not quite sure on yet. So we really don't know the policies that could come forward. A lot's going to, I think the biggest things we got to watch is, who's going to push renewable energy better? Because right now, ethanol and the renewable diesel fuel and the sustainable aviation fuel are big futures for ag production, for corn and for soybeans. So that, I think, is what we should be watching and paying attention to that side of things.
On that line, what do you see? What is the impact on ethanol, sustainable aviation fuel, those kind of things on this marketplace, particularly with the supplies we're looking at?
Well, I tell you, I think if you look around the world, actually, and I know maybe the EVs are going to be a future at some point in time, but most countries right now, whether it's Europe, Brazil, the United States, they're all looking at some kind of biofuel. And corn has a huge growth area with aviation. We talk about biodiesel, but we're really pushing in that direction. So I think from a demand standpoint, when you're comparing it to the EVs may come on at some point in time, but it's just the wrong period. So I think the growth period is actually in the biofuels, not only in the U.S., you see it in Brazil, you see it in Europe, and I think that's the direction we're going.
I just saw some stat that North Dakota was per capita of adoption of EVs. North Dakota's at the extreme bottom of the list, which makes sense for the amount of miles we put on it.
Can't imagine.
That makes sense.
And that's where, throwing in, talk about what Canada and China are going through right now with this investigation or
For that black leg disease. So, I'd be careful reading too much into it too early. But yes, classic knee-jerk reaction. So there's other ways around it.
Yeah, kind of speaking of Canada, they had that rail strike lately. Did the markets look at that at all? Do you expect it being a thing going forward?
I think wheat paid attention to it to begin with, but I think that was the shortest strike in history.
Yeah.
Basically did the last 24 minutes, and then the government sent them back. So it, in the big picture, we watched it, we paid attention to it. We thought it would slow down some of our wheat shipments to the Pacific Northwest, but in the end, it didn't have much of an impact.
Dock workers are in the East Coast, I think, are looking at a possible strike. We had the Canadian thing. It seems like we've been talking a lot of transportation. You mentioned the Mississippi River having some low water levels again.
South America constantly has strikes. We just were worried about one in Argentina. You know, Brazil soon, you know, so they pop up and then they push back down, it seems like.
So it's probably not a big thing to be paying attention to, or no?
A day or two,
No.
get a little pop. And
Yeah.
You know, I think they ultimately have always been solved fairly quickly.
Yeah.
So I think that's probably the reason that they're not on the radar as much from a market standpoint.
But we could see more of that pop up, especially with global economic issues. I mean, we talk about high interest rates here, but a lot of those countries have higher interest rates than we do.
And
Or
inflation.
not inflation, not interest rates. Thank you. Yep. So I think that's another thing to keep on the radar too. Is it could be something that just becomes more common, just like the Russia-Ukraine war. You don't get any headlines or news or anything out of there moving wheat markets anymore. So
There's still a war?
yeah.
You mentioned Ukraine earlier, ran into somebody from Ukraine. When that war started, the market obviously had a big impact. I think we thought the world was going to fall out from underneath us. It feels like fatigue has set in. The story still is there, but the markets don't talk a lot about it anymore.
Well, you know, I always say in this business, for every action, there's an overreaction. And, you know, we just went way out of control to the upside, and we're probably overdid it to the downside. And I think we've kind of set back to areas that probably, that could refire again. But I think we're back to the fundamentals, really, the weather, the issues over there, what the global prices are. I think that's where we're at, trying to see what fair market value is.
Yeah, it was interesting. I think there was 50 missiles lobbed back and forth between Ukraine and Russia overnight. And what do we hear and see in the press? Nothing. I mean, there's nothing really hitting the mainstream news right now. And I got to dig for it in news reports, even find comments on it right now. So it seems like it's in an area. It's been concentrated to that region. And the rest of Ukraine and Russia just keeps going on about their business as
Right.
usual.
Well, and they found other ways to transport things and move grain around. And the same is true with the Middle East. I mean, we were hearing that move markets there pretty regularly too, and that broke out. And now it doesn't do a whole lot to markets either.
But I think the shipping in Ukraine went back to pretty much normal, particularly when the drones were supplied. You know, they can pretty well defend. From what I pick up, their shipping is basically just normal. It's really down to the supply side of the price in the world.
Talked a lot about what's happening in the technical side of this market. We've been paying a lot of attention just how short that side of the trade is. How much attention's on the fundamentals and really what's out there with the size of this crop when you seem so much focus on the managed money?
Well, you know, I think we that's one we can quantify. We know what, you know, where they're sitting, so it's easy to talk about it. You know, we don't know where all the producers, you know, when they're going to sell, where they're sitting. We don't know other than the big picture. But I think really what's going on is we're having a change of ownership as we're down here. The funds are gradually getting out. The end user realizes it's a harvest time frame that they should get covered. And so we're kind of in this balance. But it is right. The funds are short. They haven't given up their position. But, you know, probably at some point in time over the course of the next year, they'll move from a short position to a long position. And is it going to be South America weather? Most likely, you know, 80% of the markets, I always think, are weather.
Yeah.
And arguably, I think outside market movement could spark some of that buying too from the funds. I mean, I think we're arguably cheap enough to be a good buy for some of these funds as well. So if there is going to be a bloodbath in outside markets, they're going to look for somewhere else to put their money that's maybe a little bit safer. Commodities historically have been that too. So that could be another thing that we could see play out here, given what the economic outlook does going forward.
Well, Brazil's first corn crop is down on their planting because they're just going forward now. I think they're about 10% planted, something like that. But it looks like they're going to be down about 20% on corn acres just from the profitability.
And Argentina's going to cut back on theirs too, about the same because of the insect damage and the issues they had last year too.
Right.
Well, even Brazil's soybeans are expected to, they grow every year, their acres, but actually it's expected to grow by a smallest amount this
1%.
year. Yeah, in like 2 decades. So that's pretty noteworthy too. They're slowing their growth.
Again, if anybody have questions, give us a wave. We want to make sure your questions get answered. I'm curious for the folks in the audience, how much, do you still have 23 crops sitting in the bin? Give me a show of hands, a few of them out there, right? What do we do with that we've got to pay attention to before we get into this 24 harvest?
Well, I would say if you still have old crop corn, you probably have too much money. So, so that's the first good problem. But realistically, you know, like we said before, harvest is not the best time to start a marketing program. What you have to your advantage is a carry in the market. So I certainly would stay away from cash sales at these areas, and I would use the advantage of the carries in the market out to July, see what happens with the rest of the crop. I think you have to admit that you're down at the bottom 5 or 10% of the market, you know, and you say, well, I don't know, how can that be? Well, that means you've got either 20 or 40 cents down yet to go in corn from these levels. Well, you know, you always say you're a pretty good marketer if you sell at the upper 5 or 10%, right? So if you're end user and you're buying at the bottom 5 or 10%, you're usually a pretty good coverage. So hold on and pray, I guess.
Yeah, or put a cheap put market moving reports like the USDA. We were pricing out some October $4 puts for corn. They were 3 cents yesterday. That's cheap protection to at least get you through a couple weeks. Otherwise, if you're forced to make sales here, I would be re-owning with call options. That's going to be your least amount of risk on both corn and soybeans, so it keeps you in the market in case we do get another 40, 50 cent rally. I like using those puts so far this year, have been the thing to do. So I think any stored grain on farm or commercial should have a put underneath it. After harvest this year, last year should have been the learning lesson. We should have done that on everything. But when prices are good, it's a tough sell. And I think it was a crash course on marketing for a lot of farmers and producers on how to do things. And it's just good practice, I think, to have some of those strategies in place. So,
Have you seen a lot of use of the options market by producers?
Yeah. More. Yeah, and it's the options are nice, especially if you keep it simple with your just buying a put or buying a call, because that's your only risk is what you paid for it. So if the market works against you, you're just out the cost you paid. So if it moves with you, you're able to still benefit from a move in the market. So that's why I like them.
Bull call spreads aren't bad. You can get out a little bit in time, but you're just at risk with the premium.
Yeah,
you pay.
and you can cheapen it up,
and
there's
get
many
closer
ways
to
to
at
do
the
it.
money.
Yep.
So.
Yep.
I think, and it seems like a lot of producers want to quantify how much they're spending on something. You know, if you buy a put or buy a call, you know what your expense is right away to go against your profitability. So I think it does seem to be picking more steam up all the time.
Mm-hmm.
Wasn't that many years ago, we didn't have a lot of choices. We didn't have a lot of bins in this country, didn't have a lot of storage. It seems like that's changed, though. I see a lot more bins that have been put up, and we can hold on to that crop if we need to. Is that a fair assessment?
Oh, yeah.
Mm-hmm. Mm-hmm.
And bags, guys have been using bags more too.
Yeah.
So, I mean, there's always a way to store the crop and stuff and take advantage of the carry.
Yeah, and that's what I say. When you're
that's what
doing
it's
that,
for.
sometimes the storage is your worst friend, you know?
Right.
Yeah.
So you have to make sure, treat it like a grain elevator and use it as a merchandising tool, is what I always try to coach.
You know, when producers see a small bump, you know, in the market, should they jump and take that opportunity right then, or what are you telling them to do?
Define small bump.
Well, you know, I think in this day and age, you really have to connect with where the trend is, and you have to be very mindful of when trends start and stop, and, you know, because that can just be a huge difference in a short amount of time. So I think the technicals are probably, well, they've always been important, but I would say with the fund activity, they're probably more important than they've ever been.
Yeah, and we're at big levels here on both corn and soybeans that are, technical levels of support and resistance that are important to watch, but also psychological levels. $10, $4, $6. I mean, those are big levels that guys like to watch, and those move the market. So I just think if you can get a 50-cent rally or 70-cent rally in any one of them, like we just saw this last week, you have to be doing something. Reward the market. After a steep sell-off like we've had this year, those types of moves need to be rewarded, and that seems to have been a decent trend this year, is to be doing that.
Aaron, do you have a comment?
What we like to look for is, you know, and when you look at the technicals, is like a 33% retracement to 50% retracement. But it seems like this year we've only been able to get the 25% retracement, and that's where this market ends then. And then we see it turn and come back. Like Allison said earlier, that's what we've rallied back in all the wheat, the corn, and the soybeans, all
Yeah,
three of them.
25%.
And so that's got me worried that maybe our run is over for the short term. We'll see a little retracement. I'm hoping this report brings us a little good news, which then maybe could take us through
Yeah.
that strong resistance line that we've got sitting there of these even numbers that we don't like. But
Yeah, because even just on corn alone, we closed near 405 today on December corn. That's right in the middle of support and key resistance levels. The bottom's at 385. We closed at 405. The next big area of resistance is 425. So we're really balancing here in the middle, and it's likely going to break out one way or another. That's where we're at. So
423 order we should put in, just below it.
427. I was going a little bit to the upside.
The only thing I remind people of is we always say in the olden days, oats knows.
Where corn goes.
And yeah, where corn goes. And oats was in the base, like you're talking about, from June 21st all the way until about 2 weeks ago. And it broke to the upside, and it's had a huge rally. And then wheat did the same thing. So, we'll see.
Do the moving averages play into that at all too? Then is that getting into the weeds too
They
far?
actually match up pretty darn close.
Yeah.
The 25% is like with the 50-day, the 100-day is at that 38%. So they've been matching very closely. So whether you're watching retracements or moving averages, just simple moving averages, they align pretty closely on the daily charts.
Question back there.
So my question is in regards to, the old saying is this crop keeps getting bigger. At what point in time do you think we've priced in a big crop coming? Some of the yields coming out of southern Missouri are much better than expected. Average yields of 190, 200, but now they're combining, 230, 240 down there. And then what are your thoughts looking ahead? A lot of these questions have been directed towards 24. What are your thoughts on 25 and 26 and as far as looking at the business that way? And that way.
I'm just trying to get through 23 and 24. I haven't looked at 25 and 26 yet, but
But we're getting to a point where we should start looking at 25 crop because once we get through this new crop, you won't get charged to do contracts out that far either if you're doing it with your end user and things like that. But we got really close to 450 on the corn side and 1050 on the beans. So we're getting to some areas. Those are decent for first sale. Doesn't mean you have to go half sold or, don't, put the farm out there, but try and do something. And if you're questioning it and it's a profitable level for you, something's better than nothing, at least for a start.
Randy, you've got a crop insurance side of the business. How important is that part of the overall marketing plan or, considering our farm safety net as part of our marketing plan?
well, it helps establish, levels to, that you can market at. You only, when you're in the cash market, you only want to go up to your insurance guarantees, but you got to be careful on those. When you look at like wheat, especially a year like this year where, falling numbers and where, if you were selling up to your APH guarantee this year, you might have been a little disappointed because of the quality discounts that came into play, with the falling numbers and vomitoxin. So I've always told guys when you're looking at wheat, maybe do 50% of your guarantee or A or APH and advanced sales. For corn and beans, you can go up to that, whatever your insurance coverage goes to. But it gives you, a little more peace of mind to be able to sell a little bit advanced and a little more aggressive.
So this month of September is really when we got to make decisions on margin insurance, right?
Margin protection, but you don't really want to know my thoughts on margin protection. So
Quite the salesman, huh?
How do I say this politically correct?
That's no fun.
Margin protection takes, your inputs, and it's basically a margin over what the price is going to be to what your inputs are. Inputs are a very small portion of that equation when you look at it. And what really it comes down to is the fact that you need about a 17% change in price or yield to be able to trigger an indemnity on the margin protection. Well, look at the yields we've been getting.
Yeah.
So that kicks a lot of guys out of margin protection. And it's an area base. It has nothing to do with your farming operation.
Oh,
So it is, you have to wait till you get the county yields established and the national average cash price before you can determine if you have a claim or not, which is a year after the policy has expired.
you said that very well.
So I'm not a
The
big
nuts and
fan
bolts
of,
of it, yeah.
of the margin protection just because I don't think it brings enough to the producer as coverage for your own operation. ECO and SCO is getting to become a little more attractive now. I haven't been a fan of those in the past, but this year, with that 65% subsidy, they have to be looked at.
I think we've got a question here again.
Okay, the question that I have is that, now I think one of you stated that we were importing cattle from Canada and Mexico. Okay. Can we import enough cattle from those countries that we don't need to expand our beef herd here in the United States? Because right now our numbers are down. Corn prices are low, low compared to where they've been, and interest rates are going down. So these cattle feeders can make money if they can get a hold of cattle. So are our cattle going to come from foreign countries and not from the United States in the future?
Good question.
On the feeder cattle side, you're not going to bring in from anywhere else. You're only bringing the feeder cattle from Mexico and Canada. And that's what we're seeing coming in is the calves that are going into the pastures for the summer to graze or going into winter wheat pastures and then going into the feedlots after that. So can we import enough to make a difference? When we looked at 23, we were expecting that for 23, 24, 25, we were looking at decreasing production for beef in the United States by a significant portion. Since the middle of last year, I suppose about a year ago, we started to see production ramp up in the United States for beef. And a lot of that was because of the cattle that we're bringing in and pushing through our feedlots from that being imported. So our production of beef is increasing even though our numbers are decreasing. And you also have to look at it as that we're paying, $1.70 to $1.80 for a fat cattle here in the US. They're not that price down there. So they're making money bringing them into the US. And as long as our prices are substantially higher than theirs, they're going to continue to bring them into the US.
Well, and I know one of the big box stores, I won't say who, their grass-fed beef comes basically from Uruguay. So until you stop some of those programs, they have a lot of grass down there, and it's a big import program.
I think it's a good point, though. This cattle market's been a bit of a head scratcher when you look at what the herd's at, like a 70-year low. It's crazy. We don't seem to want to rebuild this herd.
60.
And it's spilled over in the dairy market. The guys are producing dairy beef. We're seeing that milk check go into that $23 money, which is kind of crazy as well. So I guess, what are your expectations on this cattle market longer term?
Short term, I think we got some chance to see. I'm hoping we can see some pushback. Yesterday was very encouraging. We went down, we traded down we put in a double bottom. The market rallied $4 in 10 minutes. And we held on to those gains going into the close. So that was encouraging. We're up today. Confirmation of the strength from yesterday.
And diversifying from the outside markets.
Yes.
It needs to divorce itself, and it's
Trying
to show signs of doing that, and that's a positive.
My concern is, though, that we are going to start bringing in the spring calves into the feedlots, into the cattle barns, so we're going to start seeing supplies start to build. Long term, I'm friendly to cattle because I don't think we're seeing herd expansion yet. And until we see that happen, this market will stay fairly strong. We're going to see ebbs and flows, but...
My only concern is that, like, you go back to some of these old adages, the cure for high prices is high prices. And, when corn is this cheap, for some reason, it's just an anchor on the meat market. So for me, it's grain market needs to start pushing to the upside. And realistically, last September 15th, our cattle hit 199.60. If you look at the charts, that we already put our top in, and we've been stair-stepping down in the big picture, just like we did when we hit corn at $8, and we started stair-stepping down. We didn't realize it, until it was substantially lower. So that's what's happening with the cattle business. I think you have to be worried about the demand side of the market as much as the supply.
Don, you got the quote book in the markets today. I love that.
A lot of years, I guess.
Yeah. If I had hair, it'd be grayer than what I have. I think last week, President Xi in China was again talking about how he wants the country to be more self-sufficient. I think I've been reading that for the last 10 years plus, and they haven't gotten there. Is there any way for China, with the population that they have, to be more self-sufficient? Is that something that we should be looking at?
Well, I tell you, the way they're being self-sufficient, I think you see it around the world. They go into Africa and they kind of fund them, and then eventually they're taking over their agricultural supply. So I think internally, no. But I think when you look about, their strategy around the world, I think they are being self-sufficient, but with other countries' land.
See where, like you mentioned earlier, where those buys coming from South America rather than what used to come from the U.S.
I think their economy is going to be one to watch going forward. Obviously, the big economies of the world have our market moving. So China's obviously at the top of it too. So with their economic situation, I don't think they're self-reliant at the moment, but it could be something. I think we're all kind of interested to see how their economy comes back and what their demand does going forward.
Well, and they're on record, and they've got it. They've got that beltway around, what is it called yet? But anyway, it's that beltway that goes around the world back to them, where they're setting up agricultural supplies and shipping them back to the country. So, they've got their plan in place.
Looking at the clock, give me your takeaway message. What do you want these guys to go home with top of mind?
I would say the number one thing is look at the weather is the dominant issue in South America. If you're going to get real negative in the fall prices, to me, it's usually not the best time. And I would think optimistic, because I think there's some optimism going down the road with South America's issues. And most of the negative news is baked into the markets. But Thursday's a big report. Protect yourself before that.
Yeah.
Awesome.
Yeah, I would just make sure that you're taking advantage of opportunities when they come. Don't get greedy. It's easier said than done, but I like the idea of averaging up on sales for old crop, new crop. I think that's the way to do it. So just take advantage of opportunities when they come. And there's cheap ways to protect bushels, guys, so I think that's a good thing worth doing. At least gives you peace of mind going into what can be a very volatile part of the year here. With harvest, we could see some wild swings, especially with economic reports coming out and also an election taking place. So I think those are some things that I would highly stress to be looking at. Make sure you're just managing your risk.
Randy?
I agree with both, yeah. I watched this report. I think that's going to hinge on quite a bit. If it comes in a little bit friendly, I think the market's got some opportunity to see a little more upside. Be patient with it at that point. If it comes in as expected, we're going to take the path of least resistance, then I think your guy needs to, get some sales on the books, get some, or put some puts underneath, do something to protect that bottom side.
I would say at the Red River Farm Network, Randy, probably a half dozen analysts we talk to each day, and these three are always at the top of our list. Tell us where folks can get a hold of you, Randy. Martinson Ag Risk Management.
Martinson Ag Risk Management, yeah. You can catch us either on the internet. We have an app. You can download it on your smartphone. So,
Allison, Money Farm?
The Money Farm, I'm located in Ada, Minnesota. I have an office there, so you're welcome to stop in anytime. Otherwise, send me an email, allison@themoneyfarm.com. You can catch me on the phone, 701-347-5985. Just rattle it off. Or you can visit our website, too, themoneyfarm.com, and you can contact us through there as well.
Awesome. Don?
Yep, I'm Don Rose, and you can reach us at U.S. Commodities in West Des Moines. We've got a website, 800 numbers on there, local numbers on there, but feel free to give us a call. That's our contact.
Phenomenal group. We always appreciate their insight day in and day out. Please show your appreciation, would you?
To keep up with today's increasing production demands, growers are quickly realizing traditional fertilizers are coming up short. Beyond a single form of sulfur, MicroEssentials with Fusion technology delivers sulfate and elemental sulfur for season-long availability. Early in the growing season, sulfate sulfur provides young plants the nutrition needed for optimal growth. But plants dependent on sulfate sulfur alone are left vulnerable to the yield-robbing impact of leaching. But MicroEssentials is very different. Over time, microbes in the soil more efficiently convert the elemental sulfur into sulfate, continuously supplying the crop throughout the entire season and beyond. Only MicroEssentials with fusion technology delivers season-long sulfur for steady nutrition throughout the growing cycle, resulting in higher yields and higher profitability.